Good morning, everybody. Welcome to the Flow Show, Monday, 21st of October. And a bit of an odd week this week, not too busy on the data front. Then we get the PMIs coming along latest week. We do have the BOC in the middle as well. So a few bits and pieces to get our teeth stuck into. Good morning, Kay. How you doing, mate?
Good morning, Ryan. Welcome back, and good morning, everybody. Yeah, a bit of an odd week, but we will have enough speakers to keep us busy. Yeah, there's how many? I don't know, 15 or so ECB speakers. We got we are going to be treated to 4 Bailey interventions.
Yeah.
And then we have the G20 as well starting, so it's going to be whatever happens, a bit of a lively week, but on the speakers front, unfortunately.
Yeah, well, seeing that list of lineup of speakers, I'm feeling ill again. So I might take the rest of the week off. But we love them, don't we? Right,
Yeah, we do. Huh?
Yeah, we do, like a hole in the head. Let's get cracking. China, they cut their LPR rates by 25 pips a piece on the 1 year and 5 year, so continuing their easing measures over there. Also looking at potentially cutting the RRR rate once again, though it's been touted previously. The Deputy Governor of the PBOC, Liu, says that China financial sector continues to open up and embrace cooperation. Lots of talk about wooing investors back into markets. What they've also done is they conducted their first swap operation, their securities swap operation for funds and insurance companies. That was to the tune of 50 billion yuan. This is the program that they created, where they're going to be swapping those securities, giving the cash, allowing stocks to be propped up, according to them, to maintain financial stability and functioning markets. But it's just another stock market propping measure. So that has started and is underway. So we'll see how much gets thrown in that program. Over at the Bank of Japan, I don't know if you covered this Friday, Kay, there was a sources piece out saying that there's little need to raise rates in October, and that the BOJ are seeing prices generally in line with their view, enabling a later hike. But apparently they may be looking to change their view on the upside price risks, which sounds a little bit hawkish. As I say, I don't know if that was. Did you have that one Friday?
I think it came in a little later, but yeah, I think it's also like people in the know or rumors or we've been talking about that already a few times. I don't think, at least there is a reason enough with the elections for them not to move right now and waiting for to see what's coming out of that. It could be a bit fast on the back of the elections as well, now politically seen to move the rates. Yeah, I think it's now globally expected that they won't change anything before December.
Yeah,
or even next year.
And as we expected, the sources piece is already dropping, so we probably get a couple more of those before we get to the meeting. That's next week, isn't it? The meeting, 29th, is it? 28th,
Yeah,
29th?
what is it? On the 31st.
Oh, right, the end of the week. Oh, wicked. I'm not here for that one, luckily. So, goodness for that one as well. But and talking of the election, more and more press pieces coming out saying that it's unlikely that she was ruling LDP party is going to win a majority in the general election. So there's going to be some horse trading going on, no doubt. So it won't be a shock if he doesn't get a majority there. That election is happening the 27th. Over at the RBA, Deputy Governor Hauser says we are slightly surprised employment growth has been so strong. The Labour participation rate is strikingly high. Regards to future policy, says we will take into account Q3 CPI data and other data to form a view on policy. Maintain the lines that they are willing to act in either direction on rates, keeping that slightly hawkish tone in there. Our new foreign minister had some meetings with Chinese counterparts, and China was out with some comments saying they are to fully resume dialogue and a cooperation system with the UK following the meeting between China's Yi and our man David Lammy. So everything looks tickety-boo from that perspective. We'll see what that leads to. There's also the usual. Again, I don't know if you had this last week, Kay, the ECB sources that some wanted to drop the pledge to keep policy tight at the meeting. We've had various ECB bods out since then. Obviously, now the shackles are off. McClough says he doesn't believe ECB rates should have been cut faster. Simca says disinflation trend is on a stable track, though services inflation remains high. The risks to economic growth is skewed to the downside. Can't predict the outcome of December's meeting. We will have much more hard data by December, the good old can kick. Rates are likely to settle at 2 to 3% in the longer term, given that the deposit rate is at 3.25, the main rate at 3.4 now. We're not far off the top of his target range. Doesn't see the need for bigger cuts than 25 basis points. Kestrel Kazakhs says interest rates are still inhibiting economic growth. Says rate cuts can't foster sustainable economic growth, which is a bit of a worry because that's what the market will be expecting. Any other fallouts, mate, from the ECB last week? Any other?
No. Just the global feeling is that they're going to continue with 25s, as already kind of hinted by Lagarde. I think the bar for doing 50 is going to be a bit high, because if you don't do 50 when your two main economies show weakness, then the bar for doing 50 is automatically getting a bit higher, right? So that is about what we get from most of the reactions post ECB now, right? Yeah, the fact of taking away the wording of needing to remain restrictive, it's interesting, but it would have been more interesting 3-6 months ago. Now they are in the process, so I think this line is just going to be ignored widely. That's what I think anyway.
Yeah, it's a bit redundant when you're 3 cuts in and looking to do more.
Yeah.
But you know, they like their word salad, these central bankers, and they're probably going to continue it. Right, last week data, not much on Friday. We had housing starts and permits, which was up on one, over expectations, down on another. Overall, nothing too untoward. Both numbers, starts and permits, were lower than last month, but not by any huge degree. So nothing of note really from that data. Of course, we had some Fed heads out as well. Fed Bostic says he could see a lull in investment activity and household spending amid the uncertainty around the election. We're slowly getting there, just under 2 weeks, I think, just around 2 weeks before we start getting into the election. He sees the neutral rate for the Fed in the 3 to 3.5% range. Says there's ways to go to get to neutral. Rates will continue to fall if inflation declines. One of the runners for the US election, Mr. Trump, has repeated he would get interest rates way down. Well, let's see how he's going to do that if he's not going to implicitly order the Fed to do so. And it's been, well, this has been a story that's been rumbling for pretty much last week, that Mr. Putin is pulling North Korean troops into his war with Ukraine, according to South Korea's spy agency. North Korean troops have been shipped to Russian bases in the Far East for training and adjustment, and will likely be subsequently deployed for combat. So running short of his own men. He's now dragging them in from North Korea. Good luck to those boys. Israel apparently are going to look to maybe attack Hezbollah affiliated financial institutions across Lebanon. We're still waiting for what this big retaliation on Iran is, if it wasn't that attack that they did on the leader last week. There's been some back and forth with the US, apparently some plans leaked from the US side of things over what Israel's doing, so they're up in arms about that, but we're still stuck in the middle of that scenario. Right, Kate, anything else from you? Bit of a quiet start to the week.
Yeah, as I was saying, there's not a lot that really more on the facts that happened. So yeah, a lot of outlooks. We're now really getting into this election thing. Well, I mean, both sides of the Pacific as well, Japan as well. So that is one that we are going to be on the lookout for towards the end of the week. I trust we are going to talk a bit more about that as the week progresses. But it does seem that the market is not overly impressed with either side of the political scene right now. Especially if the market or at least like the people expect the LDP to lose a lot of seats. The problem is the other side, right? The new CDP, which replaces the old the DPJ. They don't really have a big economic program, which isn't clear at least up to now. So. I don't know. It seems the market is not really impressed with what's going on the political landscape. And if then you think that Bank of Japan won't change this month, that may perhaps entice the market to go and try and keep it through 150, going up to 152, perhaps this dollar yen at some stage.
Yeah. On the election stuff, so what problems are we facing? Are we facing the problems where, if obviously it's coming down to coalitions again, it's going to be harder for Ishiba to push policies, or
Yeah.
is it just going to be the same status quo? They've got partners and the partners toe the line.
Yeah, it all depends who you get into or how big the opposition will be, because if you think that new Komeito, they just elected a new leader themselves. I imagine that they lose a bit of votes, which are the junior, well, not the junior coalition partner at least of the LDP. If they lose, then yeah, you might end up with a government that has difficulties to make decisions. But and there are a few parties over there, because we know that the opposition or the smaller parties, the landscape is still extremely scattered around. There's a lot of smaller ones, but they could, like, if some of them are a bit hardliner, the other ones they don't, as I said, they don't have anything really concrete on the economic side. Some of them are a bit more hardlined on the foreign policy side. It may be a bit of a difficult picture upcoming if really the LDP loses the majority. Then we could end up with a bit of a messy picture that has not really been the case since I can remember. Actually, usually there's always been a clear victor. Even when the DPJ won in 2009, it was a relatively clearer picture. But then again, when the DPJ was elected in 2009, they made a lot of promises, but none of them came through. So it could be a bit of a mess this time, this election, in my opinion, and which they are independent, let's say, the Bank of Japan, but which could make the role of the Bank of Japan a little more difficult as well. And imagine that LDP really loses the majority. What happens at the MOF, right? Because they're all politically people put in place. So it could end up being a bit of a mess for Japan this election if really we get a very wide spread out election picture there.
Yeah, yeah, very much so. I think that's the main risk if you're trading the yen and you're watching this election. That's the main risk. It's how wide or how much of a miss the LDP have on that majority. They need 233 seats. If it's only a few seats, 5 or 6, then that's not going to be overly negative. But the bigger they miss the majority by, the more yen's going to react to that in a negative way.
I think so, because the picture now is the picture is completely different as it was like imagining that they would lose the majority. The picture is different than let's say 15 years ago, because the last time the opposition in the DPJ won the elections we were coming out of the global financial crisis. The LDP again was a bit scandal loaded. They couldn't get the country out of deflation then. In those days, but the picture is completely different now. Yes, we come out of a crisis, but it's been a health crisis, not like a financial crisis that we came out. And again, imagine the LDP losing the majority because of the scandals that they have right now. What's against it? Who is going to continue everything? So what could somewhere be small yen positive then is that they retain, even if it's a small majority, and they continue business as usual, because then you will have the same people at the MOF and etc. And that could be small yen positive. But yeah, it's a difficult situation this time.
Yeah, very much so, and we'll keep an eye on that one as we get closer to the election. Right, let's have a quick butcher's what's coming up this week on the data front. Not a lot today, not a lot tomorrow either. We get some public finance figures from the UK. We'll see if there's anything changes in there since the new government's taken over. Probably not, but we'll have a look anyway. Wednesday, really all about the BOC and their meeting down and whether they go a 50. And I'm in that position again where I don't feel they should go a 50, but given the current state of central banks and that 50s are now the new 25s, there's a case that they may or probably will go a 50. What's your early thoughts on that, Kate?
Well, I mean, that's a bit of I think, even though we know McLem was dovish, but they did produce a pretty decent employment report of late. Of course, CPI is coming up, but CPI is not the only thing in town. I'm actually relatively surprised that the market is so firmly pricing in 50 now, because I thought 25 would be the logic one too. Cut, yes, but why accelerate? Well, maybe the market thinks, well, they can accelerate while they can. Because if you, yeah, I mean, it's their neighbor's election, but if you anticipate some flying away inflation, maybe cut 50 now so you can raise again later. I don't know. I would personally, I think it's going to be 25, but or they should do 25 at least. But as you say, if 50 is the new 25, yeah, I know, yeah.
Yeah, so it's a bit. It just doesn't compute.
No.
50 move in either direction is generally a big move when there's some shit hitting the fan somewhere. That's when central banks go such big chunks. So to do it in what is effectively a normalising phase is not what usually happens, and that's why it's a bit strange to compute for the likes of us old hands.
Yeah, and if the market says 50 because the Fed did 50, let's not forget that Bank of Canada started already to cut rates, and the Fed was their first rate cut. That's why I'm always saying, like, perhaps the market like thought a bit too much about bad things when the Fed did 50. I think it was like a bit of a kickstart of the cutting cycle, but and because they could to bring it back below 5%. Bank of Canada is not in the same position anymore, right? Because they're already on the way.
Yeah, they're 3 in, so they've already done 75 pips. This will take them to 125 pips if they go 50. And yeah, but then look at the RBNZ. I didn't feel they needed to go at 50, but their higher level of rates maybe justified it. They're still
Exactly.
near the 5%. The BOC's on 425 right now.
Yeah, and
So
also let's not forget that RBNZ, New Zealand is a smaller economy and could suffer a bit more rapidly as well. So I mean, there was, and it's or we know that he's been sometimes a bit unpredictable. So I think we don't have to compare all of them, right? And
yeah,
you're right. Bank of Canada is at 4.25 right now.
yeah. So who knows? But it's a monetary policy report meeting, so there will be a presser where we get to hear Macklem and the Stephen Rogers show, as you like to call it, talking in both English and French, which is always a pleasure. And later on, or just after that meeting, we got some existing home sales data from the US, part of a series of housing data we get from the US this week. Thursday, it's PMI day, so we start kicking off all the flash numbers there. Obviously, jobless claims we need to keep an eye on as well, see if there's any weather-related shenanigans still going on there. New home sales later on in the day. There, Friday's a little bit quiet. We get Canada retail sales, US durable goods, and the final Michigan sentiment number. And then the next week, it really all kicks off with some central banks, NFP. Oh, don't forget the NFP this week, next week, because it's on the 1st. Sometimes we don't get NFP if Friday's the 1st of the month. There have been a few exceptions. So I have to check that one out if there's NFP next week. Anyway, that's next week. Let's get through this week first. So that's what we've got coming up. Right, let's have a look at what's going on in the markets, the good old markets. Euro dollar, it's doing its thing around this poxy zone. This is why I always keep it on my charts. We had this move down. It started to show a bit of support. Then we broke. Then it resisted. And we managed to get underneath it late last week. Then we got back into it. We're still finding resistance at the top of it here. This zone really is something you got to look at as a big pivot point. If we get below it and start holding below it, then we're likely to be heading much lower. If we get back above and hold it, then that's going to probably look to undo a lot of this move that we've seen from 112. So we always get action in this zone here. Always, 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 particularly if we've been away from it for a while. So expect a bit of waffling going on around here, but take your cues from whatever direction we move out of this zone. From here, I don't know. I can see it keep going lower. If the ECB are going to keep cutting, the economy's still going to remain weak over there, and the Fed are going to, potentially pause maybe at their next meeting, or definitively take a slower path of rate cuts, then by proxy, this should be heading lower if that situation doesn't change, as long as obviously the US data backs up that call as well. The US exceptionalism will continue. So from now, I can see this heading lower. 107 is the next big level down here for me. We do have extensions down to 106.70s, but this 107 is another historical level. We always seem to do something around it. So for now, the trend looks your friend for this one, but you need to know what happens here, this zone. Euro sterling had a little break under here. Was this on the retail sales data last week, mate? Because that looked fairly strongish.
Yeah. And if you draw a line there from that 15th, I think, of July low over the latest lows there, that's we just tagged that line really, and
the one down from there, yeah.
tagged it and bounced from it. That was an interesting bounce to the pip. We did the trend line there.
Yeah, yeah, I can see. I don't need to draw it. I can
Yeah,
see
that
it
one.
in
Yeah.
there. Yeah. So again, this one's still not out the woods, but that just a little break by the looks of things, that 83 figure, it didn't stay down there very long. It's put us back above this sort of 10, 15, 20-ish area that we've been messing around. So it's still keeping the downside on. You probably need to keep an eye on the wider levels. We've got this level down here, 82.76. We've been down and around and close to that area previously, but if we're under 83s, if we're under this level here, then potentially we're heading down towards this 82 figure, and that's going to be pretty significant as well. So
the test is coming, Ryan. The test is coming. We've got 4 times Bailey this week. We've got the budget coming up. The test is coming, I think.
yeah,
Euro
I can agree with
sterling.
that, mate.
Yeah, going into November, I think we'll know what euro sterling is really wanting to do around these levels.
Yeah, exactly. And that 82 level is also a big level, coming in around the 50 fib, this whole big move up from 2015 up through 2020. So it's going to be a biggie if we get down there. And there's lots coming up for the UK, the budget, Bailey, and everything else going on. So, yeah, it's not looking good for euro sterling, but we shall see what happens with that one. I'm not in a lot of stuff at the moment. The only other FX trade I've got on is this Aussie Kiwi, which I think I'm going to start to get a bit more active in. I'm just sitting on what I've got previously, but we've had a few ups and downs in here. It keeps tapping this 50s area and then putting back. So we keep coming up here. Well, I need to show it on an hourly probably. So we're doing a lot of this knocking on this 50s door and dipping and 50s and dipping, but dipping too far. Certainly not back to the levels it was pre-RBNZ. So I may look to add back into this one. I'm still happy to stay on the short side, but I may just play this area, offloading the dips and resell them back up towards this 50s, 60s area. We shall see. That's the only FX trade I'm in. Other than that, it's really the only thing I've got going on is gold at the moment, which has been going nicely. Pissed around trying to trade the break through this 85 level. Lost on a little bit, gave $5 trying the first one, and then I went back into it again. And this is kicking on from here. I don't have any techs above. I'm not one for running extensions and whatnot. I'll leave that. I know you. Is it 2740? You've got something around there, mate?
Yeah, just around here, 27.35. But I think the big zone is 28, 28 and a quarter there. That's a big fat target that I had on my picture for a very long time already, and it does look barring people taking profits and stuff, that we're heading up there, perhaps even well, not even, but we're heading up there prior to the US elections. It feels like me that to me that's a possibility that we print it going into the elections.
Yeah, and it's looking, I wouldn't say parabolic, but from this move, it's just been non-stop, really, one way. So we haven't really had a decent pullback, and we don't know where the top is. So we're going to be playing the same game up here that we played up here. We had one top, didn't confirm, and then we started to get a bit of a range setting up. Then we've had a break that looks like it's pretty confirmed. We need maybe another bit of confirmation here. But at the moment, it looks like it's rallying on. So just let the levels develop before you start trying to guess and second guess where the tops are and where the dips are. Just do your chart work and build up the picture like we did throughout here.
Don't go thinking that $5 in gold now is a move. Huh? We've seen those big moves now. Take it into account. This is a pretty well, parabolic is one, but could be getting volatile as well. We've seen those $60 or so retracement from the 26 or even $70 retracement in the 26s, and then we are adding 140 afterwards. So keep that in mind. It's not a 2, 3, 5, even not $10 days in gold now. they could be 20, 30, 40 bucks. Huh?
Yeah, exactly. Well, it's up to what, 14, 15 bucks since I woke up this morning. So
yeah, exactly.
Off it goes. Not that I'm complaining. Never going to complain about that. Right, dollar CAD, I'll have a look at quickly because obviously with the BOC, this one could be interesting. And the reason I want to bring it up is because we're getting into some big old levels up here. These high 138s, 139s. I think there's a risk here if the market expecting a 50. Obviously, the biggest risk therefore is if they go 25, which will see probably a decent dip in this pair. But then you've got to remember, just because they go 25 doesn't mean they're going to stop cutting. Getting rates down to their neutral area. Their message on the economy is going to be important if they still see weakness. So I think at this stage, a decent dip in here is likely to get balled up pretty quickly, particularly with US data still not falling out of bed. So if you're tempted to go long, Ali, then the BOC may be the level to, or the BOC may be the time when you may get a decent dip to get in. Because on the other side, if they go a 50 as expected, we could get a bit of a buy rumor sell fact in this pair, because it doesn't mean that it's going to keep shooting up. We'll need to hear what they see behind a 50. Are they really worried about something? Is it going to be a 50? There may be a pause to let the economy catch up with those rate cuts. There's all, just going to 50 doesn't mean this is automatically going to 140. So there's sort of more reasons why we may not continue higher than the fact we may do. Obviously, if they're outright dovish, then obviously we're going to be going to 140. And we've been here before. We've been up here before. We've failed up here plenty of times before. So we'll have to see what's different that maybe is going to see this go through 140. And if it does go through, it could be quite a decent move. But if it holds, then we're probably going to see maybe a decent pullback, at least maybe down to 137s, 136s even, maybe even back down to this area, maintain the range. So, yeah, Ali, I think if you're looking to get long this one, just maybe you need to think about being a bit picky where you're going to enter rather than just jumping in now. And yeah, for euro dollar 107, it's going to be an interesting level if we get down there. For me, most certainly, big old level. Right, Kate, going to ping it over to you for a couple, mate, if you've got anything.
Yep. Okay, dollar yen. Right, let's go from longer term to shorter term. Start with the longer term first. I've been talking about it a few times as well, and we can see this is the weekly cloud here, okay? And we've never closed below. This was the only occasion here around 142, which was in September, where we roughly closed at the bottom end. And look, now we've been like trying to run against the top end of the cloud as well since then, okay? This is quite important for the fact that the Japanese are looking at those clouds, obviously, and also for the fact that the top end of this week and also going into next week will be bang on that 152. Okay, so this is one that that again highlights this importance of this 152 in the more medium term. Coming to the daily, we've seen the cloud today comes in at around this 50% of the move that we saw from 162 down to 140. So for the day, 150, call it 150.80. The cloud is at the 150.70. Okay, so 150.70.80 is the level for the day that is going to have to be observed if we continue higher, okay? But taking the cloud away, and then we see that since we've broken this trend line, we tried once to get above, and we gradually coming back up to there. And that's also where the 200 DMA is lying. So I just want to highlight all these levels here. 153 quarters is the 55 is the 100 DMA. All these levels here from 150.70 up to 152, it's going to be a very important zone in the dollar yen, which of course culminates at 152 because it's been a zone of enormous interest in the past. And also what I showed you last week, it could be the symmetric shoulder of a new head and shoulders coming in as well. So that again highlights this importance. If ever we would get there, and we are trading back above 150, we need to take that into account on the dollar yen. We are trading above 150, so we have to look at the top side, especially with this election upcoming as well, and perhaps the Bank of Japan holding still. This is pretty important, I think, that we are trading back up here. Now, Ali, you were asking where do we buy it if we're bullish? Well, since a few days we are trading inside, forming a little bit of a range here as well, which is still quite high. I don't know if any of the flag watchers are using this, but it does seem that already around 159, 158.90, 148, sorry, 90, there have been buyers stepping in. Now we're trading here. I think this is for the shorter term, anywhere between 149.40 and 149, I would say. We are going to find support if this move is to continue. That's how it looks in the dollar yen, and I can see it continue really, especially with those elections and the Bank of Japan upcoming before we even go into the US elections. Okay, this is what I'm seeing right now on the dollar yen picture. What else, Canada, you've done? There's one that that I'm feeling like we had these little comments about the RBA. Somebody from the RBA came out with a bit of a comment there, and I didn't find it very bullish, to be honest. And you remember last week I highlighted this 67, 15, 20 zone. Okay, we traded a bit above, but we are back below. I think for as long as we're above this little zone here, I am going to say that Aussie may be losing some of its elasticity or some of its shine. So I think for the Aussie, the picture is perhaps one that we should be buying on dips is a bit changing. It is slightly changing in my opinion. And I'm going to perhaps be looking at any move back above 67, 10, 20, unless something happens in the dollar, obviously. But if we get a move back above here, right, it's going to be interesting, because if we keep below, then I think the Aussie could actually be heading a bit lower again. That was one that I spotted as well this morning. Quick look on this is just to show that gold that I have. It's an extension of the last correction that we had in those in that 26s, back down. So now we a bit of an extension here, but it's more important on the longer term picture. The 28 20, as I already showed many times, is going to be important. Silver, look left. This is the 1 week. Okay, this is the big correction that we had over the 10 years in the teens. That we had, and the 61.8 comes in at around $35. And I've always said that, and also if you look at prior highs here, is also around 34.5, 35. This is going to be an important level for me, $35, and we are closing in rapidly as well, as we can see. I think metals are also perhaps part of this inflation expectations whether Trump or Harris makes it into the elections. Especially Trump, I would say, could see these metals push higher. But I have taken some more profit on my longer term longs here for several reasons. First of all, that we are approaching the 35, and again, against the 35. Sorry, I'm going to sell more. But also, it's a very long-term position, and I've been really in since here for a number of years, and the carries is costing quite a lot, so I need to start to take profits on my very long-term longs as well. And then the other interesting one to look at a few different instruments today is oil. You know, I showed you last week that every time we saw those medium-term spikes on oil for whatever reasons, it never held. And again, we are moving down. We are coming into interesting levels here. First of all, if you look at the bigger picture, if we don't hold very soon, we're actually rebounding a little bit today. But if we don't hold very soon here in around the 67s, this could mean that we're in for a revisit of those low 60s. If we take it a little bit closer look at it, we are on support, okay? Or we were on support in the 68s, all right? There was a bit of support there in the 68s, and now we are below this zone here, 69.80. We are right on it, up to 70.30. That is one on the intraday that we want to have a bit of a look at or monitoring it, because we've seen that it's also an area of interest in the past. What's going on here? If we get back above 70.30, it can correct further. If we hold in this zone, it's just going to be one of those corrections again, and we could be in for the test of the 67.5, 68, okay? And then we see if it breaks, it may again accelerate down to into the 65s here, right? Where we find that trend line that I showed on the former picture. So and the closer we get to the elections as well, this thing is going to continue to move, obviously, on geopolitics. So it could be a bit of a fast mover, continue to be fast movers, these oils as well. All right, and yeah, last one, that dollar Swiss is not going. It's not going. The 60, 86.70 here. 1, 2, 3, 4 attempts in the past 2 sessions, not breaking. So this is your level on the day again. I tried, but I just let it go because it's just not going. I will try it again if it breaks above 86.70 though. I think it's a decent enough level to go and have a visit upstairs. But if it caps, no need to fight the dragon, okay? Euro Swiss is much less clear. I think now we are consolidating, consolidating within a bit of a triangle here, Ali. It's going nowhere. Look at this. It's going nowhere. But what is to note is that it's not going higher. That is, I thought this whole thing was like a base forming area, but it's just not starting to hold. It's not holding all those moves higher. Obviously, also having to do with the euro as such, but yeah, people still not. Swiss is still one of those currencies that is perhaps trading a bit on risk off geopolitics. So I'm not too tempted to catch knives in this one unless I see those low levels again, perhaps in the low 93s even. All right. So for the time being, I'm not very interested in what's happening here now. And with that, Ryan, back over to you, mate. Oh, unless there is. Oh, Nat
Thank you very much, mate.
can you have a look
Cheers.
at Nat Gas, or shall I? I'm
No.
not charting it, so
Yeah, neither am I. You can have a look if you want.
I don't trade it, Himashu, at all, to be honest. Well, I don't even know the. Is it NG?
Hang on,
Where
I'll
are
tell
they?
you.
NG.
Natty
As you can see, I've got nothing
is.
at all, and that's not the right one either. Where is Nat Gas? Oh yeah, it is. Well, it's been one that has been. I know it's been bought quite heavily, but now it's coming down. All energy is actually coming down a bit surprisingly, I would say, if you look at geopolitics and stuff. But you know what? Okay, this is more perhaps I don't know whether it has a lot to do with China, but in general, in my book, for energy to really continue or to start moving higher again, I would say we need to start seeing investors buying the Chinese revival. If we get a Chinese revival, I think then in general, and in general, then I think energy can move higher again. That's going to be one of the big things to revive energy, I think. And the other risk factor on both sides of the energy spectrum is the US elections, because imagine that, for instance, Trump slaps tariffs on everything, makes it difficult for foreigners to continue to invest or to sell in the US. I think in the big picture, it may not be too good for the general trade. And if you say general trade is under pressure, I can't see energy really lasting the move higher, Himanshu. That's kind of the global feeling that I have, but I'm really not a specialist in nat gas myself, you know.
Yeah, and maybe some of that September through October move, there's been some Europeans picking up some gas, filling up supplies ahead of the winter, because obviously there's still this divergence from Russian supplies as well. So yeah, the geopolitical picture has a big say in that as well. Right, let's call it a day for today. It's only Monday, so hopefully we've got you set up for the week ahead. Take care, trade safe, and we will see you all tomorrow. Have a good one, everybody.